Everybody, good morning. Hey, we got channel members Rob, David, Diane, Hugh, Swinburne, Donald, Craig, Will, B, Arturo, Donald, again, Lieutenant Colonel Goose, Captain Sledge. Good to see everybody. Just wait out, check on the general. Haven't seen him in a while. Good to see everybody. Frank, Dan, Rob. Welcome to the stream. It is August 27th, 2025. Wednesday, we have NVIDIA earnings coming up after the close. But imagine this. Just kind of picture this. You're 52 years old. You've been paying your student loans for 3 decades, and you still owe money. Congratulations. You've just become part of the most spectacular financial disaster since the housing crisis, probably. And guess what? The charts are literally marked WTF, because even the data analysts out there can't believe what they're seeing. So welcome back today, August 27th, where we turn financial disasters into potential opportunities. Today, we're diving into the student loan apocalypse that's about to make 2008 possibly look like a warm-up act. So here's the beautiful story of our government and what they crafted. Back in 2020, they said, hey, pandemic's rough. Let's pause student loan payments, right? Fast forward 2025, 5 years later, and they're shocked, absolutely shocked that people suddenly can't afford these payments that have been on pause for nearly 5 years. It's kind of like lending your broke friend money and letting them forget about it for 5 years, then being surprised that they're still broke and can't pay you back. Think about that. But here's where it possibly gets delicious for us investors. The latest data from the New York Fed shows student loan delinquencies just hit 12.9%, the highest in 21 years of data. That's not just the fresh graduates drowning. The biggest spike, people over 50. That's right. The people who have been paying longer than some of the new graduates have even been alive are throwing in the towel and not paying the bill. The total damage, we're talking about $1.6 trillion in student loan debt. That's trillion with a T. And an $18.4 trillion total household debt. So that total debt is $4 trillion more than before the pandemic. Because apparently the solution to going broke is to borrow money and go broker. Now, while everybody else is out there crying in their ramen noodles trying to pay the bills, let's talk about how to profit from this beautiful disaster, because if there's one thing I've learned, it's that someone's crisis might be another's opportunity. First play, short the student loan servicers. Companies like Nelnet, NNI are about to have a bad time if this thing really goes sideways. When 13% of your customers stop paying the bills, that's not a hiccup. That's kind of a hemorrhage. Now, these companies make money processing payments. No payments, no money. It's not rocket science. Though apparently this might be to to people that avoid simple math like on Wall Street. Now, second play, long the debt collectors. Encore Capital, ECPG, Echo Charlie, Papa Golf. It's basically Christmas morning for them right now. I mean, they buy defaulted loan debt for pennies on the dollar, squeeze whatever they can, any way they can. And with 131,000 new bankruptcy filings last quarter, student loan defaults are about to explode. These guys, they're going to be busier than a one-legged cat in a sandbox. Whew. And here's the really juicy part. This isn't just about student loans. When people can't afford their loan payments, they can't afford anything else either. Consumer spending has already been dropping in the first half of 2025. And we haven't even seen the full impact yet. This is going to ripple through retail, restaurants, entertainment, basically anything that requires disposable income. And we kind of talked about the restaurant business yesterday during the profit panel with Alex. So the Fed is watching this all unfold like a slow motion car crash. Jerome Powell, still out there saying consumers are strong. They're in good shape. We get PCE on Friday, though, which is kind of like saying the Titanic had a little ice maker problem. And, we'll see. I mean, we all know that one went down. Literally went down. They're going to be forced to cut rates in September because the alternative is watching the entire economy implode. But that yields inflation, potentially, probably, and that's higher prices. This thing is gonna get worse before we get better, unfortunately. And here's the kicker: the crisis is hitting people across all age groups, and the numbers are showing especially hard hit are those 50 and over. These aren't kids who made bad decisions about their art history degree. These are people who've been playing by the rules for decades, and the rules just changed. When your most reliable demographic for paying bills is defaulting, this isn't a student loan problem. It's an everything problem. Housing market, forget about it. You can't buy a house when you're defaulting on your student loans. You can't even pass the background check. Credit card companies, they're next in line for the default parade. Auto loans, well, good luck financing a Honda when your credit score took a nosedive and might be negative. So, I mean, you get like 200 points just for having a credit score, right? So here's your playbook. Short consumer spending stuff, or, maybe it's going to have lackluster performance. Be careful. And maybe you cut back on what you got. Retail restaurants, discretionary goods, long things that profit from financial distress, debt collectors, bankruptcy attorneys, companies that provide financial services to people with bad credits. Consider defensive plays too. When the economy starts wobbling, people flee to safety. Utilities, consumer staples. We've talked about these a couple days now. Buy some gold if you're feeling fancy with the bling bling. And the Fed is probably going to cut rates coming up in a couple weeks. So anything that benefits giant from rate cuts could see a boost in the near term. But remember, timing's everything. This crisis, we're just kind of watching the cracks in the foundation. These delinquencies are going to turn into defaults. That takes a few months. Defaults are going to turn into bankruptcies. That takes a few more months. Bankruptcies are going to turn into full-blown consumer recession. That's probably going to take a few more months. So we're like 6 months out, maybe 9, 10, maybe a year out. This student loan crisis isn't just coming. It's already starting. The only question is whether you're going to be on the right side of all of it or the wrong side of all of it, while everybody else is trying to figure out how to explain to their parents why their college degree costs more than a house. It is worth less than the paper it's printed on. Maybe you could position yourself to profit from the chaos if you're a savvy investor. Because in the end, the house always wins. And right now, we could be the house potentially if you're on the right side. So hit the like button if you like anything I said. Give me a comment that you like this line of monologues that I've been doing lately. And maybe we can turn disaster into dollars if you keep coming back for more. Hit subscribe, hit the bell, put an alert in your phone to come back and see me every day. So anyway, throw that over the side, jump over here, and all trading. Now that we're going to talk about some ways to make money today, all trading involves a substantial risk of loss in past performance. Well, it's not necessarily indicative of future results. Just because I see a bunch of cracks in the works doesn't mean anything's going to fall apart, at least in the near term. So be careful. As always, we got NVIDIA earnings today, and that could be spicy. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose them. Be careful. Even if you desire personal financial advice, hire and consult a financial advisor. Be careful out there, everybody. Be careful. Be careful. That's the name of the game. So today, like I said, it's kind of a benign day with no real anything going on. Get some crude oil inventory at 10:30, but tomorrow, GDP, and we do get the After the market closes, we get NVIDIA earnings. I mean, they're priced for perfection, right? And when you think about it, everybody's like, there's so much giant opportunity in NVIDIA. But the way I see it, let's go back to page 1. Gold, the biggest asset out there. Biggest one, $23 trillion. Number 2, NVIDIA, $4.4 trillion. Every dollar that they gain, like if they pop to 200 tonight, between right now and tonight, when they report earnings, pop to 200, that's $19, $18 up. Every dollar they go higher is $24.4 billion. $24.4 billion. So $24.4 billion of market cap, and we go up like $18. It's $439 billion. Almost $500 billion just to go up to 200. That's nutso kind of money. Now, supply and demand, supply is weak on the shares. I mean, supply is kind of fixed. Demand rises because everybody thinks they're going to be so reality check here. I'm going to invest in this. I want to make 100% return. Right? And I want to double my money. So we need $360 stock price to double it, right? 362, 364, however you want to look at it. $360. How much money needs to flow into NVIDIA to generate that number? To double their share price. This is what a lot of people don't get. To double their share price, their market cap has to double. So we're talking about $8.8 trillion. That means that the value of NVIDIA, if they doubled, would be worth basically 1/3 of all the gold in the world. I don't know if that makes sense. I don't know. I mean, you got Microsoft at 3.7 trillion. You got Apple at 3.4 trillion. You got Alphabet at 2.5 trillion. You got Amazon at 2.4 trillion. Bitcoin, all of Bitcoin's 2.2 trillion. So we're going to add, you think about how crazy Bitcoin is. To double NVIDIA's share price, we need all the craziness of Bitcoin times 2 at the current Bitcoin price. For Bitcoin to double, needs 2.2 trillion. It's easier for Bitcoin to double than it is for NVIDIA to double. Think about that. Think about that. Easier for Bitcoin to double. And if Bitcoin went to, if NVIDIA did double to 8.8 trillion, that'd be a 4x or potential. We could be getting close to $500,000 of Bitcoin to push the Bitcoin's value up to that doubled level at times 2. Just think about these numbers for a minute. All the silver in the world is only worth $2 trillion. So right now, the value of NVIDIA is worth all the silver times 2. I don't know. Let me know what you think in the chat there. Let me know in the comments. If you're watching this later, does DJT market cap every time their market cap doubles? Yeah, that's the way it works. So just looking at DJT, they popped recently, right? So grab the earnings, more financials. So to double a share price, you have to have, for every dollar it goes up, right? Every share has to gain $1. That's $277 million on Trump Media here, DJT. Their market cap right now basically $5 billion right there. So for them to go to 36, basically at 18 here, for them to go from 18 times 2 to 36, that means this number has got to go to basically $10 billion. With a B. It's very simple. Like this is not like some complicated. It's not like options pricing where it's Black-Scholes and then you got all these. This is very simple. Like the number of shares times the price equals market cap. Each share times the value of each share. This is why a company, when you look at Apple, and you're like, okay, they're like $200 a share. So they're worth more than Nvidia right now, right? No. Because they've got 14 billion shares at 228. But Nvidia has 24 billion shares at 180. If they do a split, then this will push this up even higher. So this is why doing stock splits is stabilizing for prices, especially as you get billions of shares, because it takes billions of dollars to push that market cap higher. Now, companies are way overvalued. That's a whole different story. Like, you look at the price to sales. Right now, Nvidia is priced for 30 years. Think about this: 29.8 years of sales. This is sales, nothing to do with earnings. No, like taking out costs of whatever. It's going to take 30 years at the current rate of selling. 30 years to generate the market cap. Now, you'd be like, well, they're going to keep growing like crazy. Who do they sell to? They're already selling to everybody. It's kind of crazy. You look at DJT, this is where things get wild. 1,100 years. This is why I like price to sales. Right? That's all the sales, not costs, not nothing. Right there. 1,100 years to justify the current price. 1,100 years of all their sales. Now, their sales are a pittance, and they have lots of opportunity to grow sales. Does Nvidia have opportunity to grow sales? I don't know. You look at this one. I've traded this one. I made a buttload of money on it. 48 years. Why did I quit? Why did I stop? We got to a price target, and this is a little crazy. Like anything over 30, when we go into any kind of financial hiccup, anything over 30 gets gutted. Right? Those are the targets for getting gutted. They're the ones with the crazy valuations. Look at this. ASTS. People hyping this one. Alex loves this one on Profit Panel. 2,400 years. You're like, well, it's a growth company. We have opportunity. Well, can't fake sales. Right now, their sales, they're priced for 2,400 years of sales at their current rate to generate their market cap. Like, well, how's that compared to like Apple? We roll down in here in Apple, 8 years. 8 years of sales. Much more reasonable than Nvidia. Google's an up-and-comer, right? They're kind of lagging behind. 6 years. Yeah, there's a Google potentially better value than Apple right there. At the current pricing, if they're going to catch some AI money. This is how you shop for value right here. Now you could look at price to earnings. Now the thing about earnings, they can fake earnings. They can move costs and pull forward and pull back costs and realized gains and this, that, and the other. So where did Ford fall into this? Now when you go into autos, this gets to a whole different conversation. 0.25. So only 3 months of their sales to justify their current market cap. But look at their COGS. Their cost of goods sold. They bring in a lot of revenue, but they spend a lot of money building those cars, and then all of a sudden, they're negative income. Ouch. Got to watch your COGS. It's cost of goods sold. How much does it cost you to make the stuff you sell? For Ford, they're barely selling their cars for any extra money over their costs. This is a lot of things like business. If you haven't done in business, delved in business or, done this kind of stuff. I've run a small business for a long time, and, you got to have margin. And when they talk about margin, it's the difference here. And then you get your gross profits, but then if you have debts and stuff, you got to make sure that doesn't eat up what you got left so that you actually make a profit at the end of the day. Right there. How about Amazon? Amazon's doing okay. Like, not horrible. We got 3.6 years of sales. If you look at it as an AI company or robotics company, they can perform, right? They have potential. But they also, when you look at it, their COGS are kind of high. And expenses down here, a lot of that's usually due to debt, high debt. Look at that. Their debt, very large. So they took on a lot of debt, and their debt servicing usually comes into this. This is usually where you pay your debt, right here in accounting. So you kind of look at company health this way. One I've been selling puts on has earnings coming up. It's half a year for sales. They do have some quite high costs, and their expenses kind of high, but they do squeak out a profit over here. Debt kind of high. Free cash flow negative. So just to cover, that's another thing you can look at, free cash flow. That middle number, it won't hold the bubble up there. But free cash flow negative right now, so they're eating cash, burning cash a little bit. I feel like they have a potential to turn around a little bit. Look at Nvidia. They're sitting pretty. I mean, their debt way lower than their free cash flow. Can they keep hitting? Sure. Is it worth 30 more years of sales at the current price? I can't say yes. I mean, obviously the market thinks they're going higher. 13 years of sales, 13 years, think about that. All the cars you sell, no costs. That's just, if you could take all the cars you sell for the next 13 years and pump it into your share price, that would be Tesla. Now, the reason that those numbers get crazy high, it's not over 30. That is high, though, especially when we compare it to Ford, that's like 3 months. The reason is expected growth. Like, they expect the sales to go up in this period of time and justify these high valuations. They're paying for forward-looking. This is why when you hear earnings reports, half of it's about how we did, half of it's about how we're going to do. And when you lower guidance, it's usually why a company gets punished, because most of the time they're priced for future earnings here and growth. So if they guide with lower growth, usually this number gets sucked down. It's kind of the way the psychology works in this. And a lot of times it doesn't make sense necessarily, because when we look at earnings, all we see, especially on here, we see how we did and how we did. We don't see any forward-looking anything. Is, earnings per share and the revenue. How much did we sell? What was the earnings per share after we took out costs and stuff? But we don't ever look at, there's nothing on here that reports the other like 12 numbers that get reported and look forward to future. That's why, earnings reports are kind of a fallacy right there. And technical analysis, to me, that's the thing that really hits it out of the ballpark. So looking at the S&P 500, let's look at the futures, see what happened overnight. We're still a little bit red, coming back up, might turn green. We're rocking it, baby. I mean, probably going to push on out. New highs. We still got some upside to go here. We haven't hit a new high yet. Didn't hit it back here on Friday. Didn't hit it yesterday. Still set to break on out. I think as long as we're holding up here, above this level back here, as long as we're holding above that, probably going to go up to a new high. Tips the odds. I favor a new high over a new low as long as we're above this level down here. In Q, a little different picture, but still same kind of level. As long as we're above that line right there, as long as we're above this, probably got the potential to go higher. If we get a big banger on NVIDIA, this thing's probably going to rock it out. So place your bets. If NVIDIA hiccups at all, we're going down in a blaze of glory. If NVIDIA rocks it, this is probably going out new highs. And we're not even anywhere close compared to ES right there. ES scratching at the top, just a few points away. You just compare those two, right? That versus that. We're way down here. Russell, small caps. It already, like, right there on Friday, that was pushing out to a new 52-week high. We're still well off of all-time highs. But I'm about 80% convinced that it's time to buy a call against the hedge. Looking for 2,600. At 80% convinced that that might be a smart play. Now, I still feel like down could be the way this cookie crumbles, but price actions telling me otherwise. And looking at oil. Oil sitting here back testing that what was support, now it's resistance. If we get any kind of downside, we're probably coming down to low 50s. Gold, still struggling in here. I mean, the excitement on gold kind of ran out. Oh, thanks, David. I appreciate that. Thank you so much. Helps me justify doing this YouTube thing every day. Thank you all channel members. I do appreciate all of it. So gold, it was hyped. Like every guru, like back here in April, I said a lot. I was like, be careful getting long gold right now. Too many people are hyping it. And what have we done for May, June, July, August, 4 months? Absolutely nothing. Price pattern here. Potential to come down in here. Make a visit back into the 31, 3,200 area. That's what I see. Lower low than this low we made back in May. We had a lot of volatility really fast in April, May. And we just kind of been low volatility since then. Did poke a higher high, but we couldn't stick it at all. We immediately rejected that. Lower high, as long as we've got a lower high, down is probably where we're heading for right now. I'm not talking about gold going all the way back down, just a small correction. Get a low, lower than this. Very fast low we got back here in May. Once we do that, we kind of clear the runway to go higher again. This is all corrective overlapping garbage price action. If we can flush this down, kind of clear all the stops out, basically, sets the stage to go higher again. Clears the psychology. Bitcoin, still grinding down here. I'd love that to be the bottom. Came shy of my roadmap line. This would have been a no-brainer for me if we touched here and then started higher, just like we are. I've been like, it's on like Donkey Kong. Right now, we still have that potential to sit here a couple days and then dip down here. This weekend, 3-day weekends have typically been bullish, so maybe we screw around in here till Labor Day weekend, and then we wake up and it's like big candle. I don't know. We'll see what happens. I'll be live on Monday. talking about crypto. We'll kind of dive in, look if there's any opportunities outside of the big dogs. Ether, this one has the potential. David, I know that you've lost a lot of sleep for this on this one, but this one right here, this is the setup I've been looking for, with a potential upside target above the danger zone right there. I want to see this pop. Now it's gotta do it. If we start breaking down back below the low of the last couple days, that's the stop out. Relatively small risk, pretty big reward here. NKD, global liquidity indicator, still being soft. I don't know that any of the big risk assets, Bitcoin, big tech, I don't know that anything can get going higher till this turns. We're back testing the breakout from a year ago high. Last summer we made this high and we got monkey hammered in the, these giant big spike down. It's whacked. Like, oh, we're going higher, and then come along and club a baby seal, and then came back up and did it again. This went lower. I was talking about I needed to see a lower move, especially on gold. This one did it right here. And this came up, did that same kind of move. Look at that move. It's very similar to gold, right? Just different scale. Make a big drop out and go higher. This was actually higher time frame. If you put it like this, it looks a lot more like gold. All right, look at that drop. We came up, like sudden drop, chop around, chop around, chop around, kind of do this and screw around right here and then fall out. That's common price action for corrective. Look at that. See that price action right there? Go back to the gold daily chart. See that price action right there? See that big spike down? It's kind of consolidation in here. It's actually probably a 3-day chart. That looks almost identical to NKD. Dollar. Still consolidating in here. I see a lot of worries that dollar is just going to fall apart. I think we've got support right down here. This is my current target right in there, around 96.5. Current target, we have the potential to come down here, retest this downtrend. Resistance going up is right here. This was a 3-wave up. That's usually counter trend. Trend coming into it was down. Resumption of trend. Probably need a lower low than that low we saw right back here in July on the dollar to clean this thing up. Simple as that. Apple, price action sloppy. That kind of looks like the same sort of stuff, right? Big spike down. This grind up in here. We got a little pop, but very easily we could flush down, make a lower low. Same kind of price action. Gold, NKD, same kind of corrective junk. That's why, until we prove otherwise, I'm still looking for another potential lower low, at least down below the April low on Apple. Amazon, a little different story. It's consolidating up here. We had this little gap down. We touched into it, got a rejection, came up just shy of it, rejection again. If we break down below the roadmap line, we could match that first move down and come back to a lower low. But if we can pop above that gap down consolidation stuff, 257 would be the upside for Amazon. Google is working on pushing out. Like, this is kind of, I thought we were going to do a second move down, but nope, we're price action's proving it's doing otherwise, and as long as we push out 220, maybe even 230 on the upside for the targets there. And like, where would I stop out if I get in? Well, I'd probably set an alert right at 200 and decide if this is looking bad and we, potentially going down here, and you could reload down at 180. And if 180 doesn't hold, it might actually be going on down. That would be the things I would, if I was going to get long Google right here, shooting for that. This low right here would be my low, right around 200. Knowing that we could go visit the daily roadmap line down here around 180. And if that doesn't hold, okay, going down. Meta, we popped up. We hit the targets up here. A retrace would be what I expect, and then we test it and see if we can hold it. And if we hold it, we can go higher. If we fold it, we could come back down near the bottom again. Microsoft, this already did that. First move down, second move down. Came running up, came shy of the 1618. Still downward pressure. We'll see if we can hold 49. If we don't hold 49, 468. Breakout level, and that's where the roadmap line comes in. So looking for it to hold here and then hold here. Not really bullish until we hold some support and turn back higher again. Show some upward price action. And then that 565, probably my target area for now. I think it's probably a major resistance. Talking about trillions of dollars. When you look at Microsoft, you're like, well, how big? Every dollar move is $7 billion. So it's not quite the 24 billion that we see on NVIDIA. 7.4 billion. So a $10 move is $74 billion. Think about it that way. It's a lot of money flowing in and out of the market. NVIDIA, we're grinding right up in here. Earnings potential. Popped it. I already talked about what happens at 200, 212, kind of the upside target. If you think we're going up, it's gotta perform. We could come back down and retest the breakout very easily. It's 152. That's like nearly a $30 downside. And going back to the calculator. Oh, cool. Popped on the other screen. $24.4 billion, because that's how many shares there are. Times a $30 move. $700 billion could evaporate if we just come back to the breakout. That'll probably make headlines. $700 billion market cap evaporates off NVIDIA if we just came back and retested the breakout. Tesla. It did this watermelon seed squeeze thing. We're popping out. We kind of popped out and then we back tested right there. Even though we poked in, coming back out. Upside targets right here. And the way these things work, there's potential for the width of the beginning of the watermelon seed squeeze. That's cool. I'm moving the wrong thing. So this could be the upside target right up here. Whether earnings or sales or anything makes sense. This thing did this big consolidation. And then when we pop out, a lot of times we'll see the move of the mouth, beginning of this thing. After it squeezes really hard, we see that pop. So that could be up here around 450 for the target. Netflix, we're still in this corrective potential. We did one back here. Ching, ching, ching. We didn't really get the proportions that I like for an ABC, but we got the lower low. I was talking about on gold. That's all we really need. That just that satisfies the only real rules of this thing. It's just getting a lower low. That right there is the low we're looking at right now. So if we push on down, now we have resistance up here, 1265. That's the 618, and then target down here, 1065, down to around 1,000. Pretty wide downside right now. would be stretched to be long Netflix right now. MDB, get a nice pop on earnings. Still a lower high though. Be careful. This has got a big downside corrective, and we didn't make that lower low. Similar to all the things I was talking about on gold and all the other things. We came down higher low just barely. Retracing up here. We did a retrace before. It's going to still lead to one more dip. Back lower to clean this up. This is all nasty overlapping junk. Be careful. Now, does it have to? No, it can just do whatever it wants to do. It can break out, get through this high right up here. Resistance up around 370. Like, wow, that's a long way up. It's another 190 points. Yeah, but that's what it is. All right. We filled the gap. We had this giant gap down right here. This price action here kind of fills it, but we may see it back test. If we back test and hold the roadmap line and turn higher again, we might go retest this downtrend of highs. It's not a very strong one. Trend lines are the weakest form of technical analysis. Somewhere up around 445. And if we get above that, could be looking for 1,800 to 1,000. 2x leverage on MDB. Brand new ticker. Statistics that I saw yesterday. As of yesterday, there are now more ETFs listed in the U.S. market than there are companies. Think about that. These 2x leverage ETFs are going crazy. And it's not just leveraged ETFs, just ETFs in general. There are more exchange traded funds listed now than there are U.S. companies. Kind of mind blowing a little bit. Snowflake, I own shares of this. I booked off the options because I didn't like this price action. Turns out for a good reason. Could we pop here? Sure. My upside target right here. And I'm just sitting on that share. I got almost 100% gain on it. I bought it down here. Waiting on this thing to tell me it's going to do something else. All right. PVH. These are, on this gainers list, this is things that were moving up $2 or more than pre-market. MDB up 70. Kind of the big winner chicken dinner there. PVH was gaining. Now it's starting to lose it. OKTA at the roadmap line, not really showing a breakout. ESTC kind of in a downtrend below the roadmap line. That's downward pressure. AHL. I have no idea what they do. There's the lowest low. That could be the end of the correction after going IPO. So we could start doing bullish things, but that's a gap up and another gap up, and there's no roadmap line. There's nothing telling me what the forward projections might be. So I have a hard time getting involved, but maybe you want to buy some, see where we go. Sats, EcoStar, trying to roll out a competition to Starlink. From what I understand, these guys have had TV satellites since we used to have the big 3-meter dishes out in everybody's yard, and that was the only satellite you got, way before DirecTV and Dish Network and all that. Trying to get into the internet game now. I think they would have tried that a long time ago, but they didn't. Anyway, so, I mean, I guess they had satellite, but you had to dial up too, and I don't know, whatever. So, here's where we're sitting. Gap up. I don't know if that's strong or not. Let's look it back at it. That's a new all-time high. Off of the all-time low. Doesn't really give me much information to work with here. We have one pullback. We're already hitting the extensions of that. So I'd be careful. While it could run, it could also correct pretty deeply. RY, it's going to be the wrong RY. Let's get the right RY. It's US listed RY. And we're kind of pushing the extensions on this one. Got the high, got the low. I'd watch out for a retrace there. We're just pushing extensions. SLON, another ETF on Solana. Solana looking not so bad. Rocket Lab 2x long. We already kind of talked about that one. And the risks. Be careful. Cloudflare. We hit targets. Watch out for retrace. Back to the roadmap line would be expected. DDOG. Went for the breakout and got slammed back down. That's a 3-wave retrace to the roadmap line in nice proportions. This could be setting up the next run. If we push back above the 142 area, we could have the energy to bust out. Right there. KSS, Coles, trying to turn themselves around. Work off the lowest low, retrace. Got this high, we got this low. Next upside 23 to 25. Encino. Big sideways. I'd be hard pressed getting involved in this right now. For me, you can do what you want to do. It's a lot of sideways consolidation and a rejection up here at 41. That's not, I mean, you can make some money. Cracker Barrel announcing that they're going to concede and go back to the logo. Maybe this was the bottom and upside potential. 120. DXYZ, probably a bubble pattern and probably still got downside to go. That's been my target, back down at 10, 11, 12 area. MCFT, Mastercraft, boats. I don't remember what I was looking for. Yeah, websites don't give you any information anymore. It was something. Let's turn around. Yeah, Vonor. That's what I thought. Like they're headquartered just right near where I live, where I am. That's a lot of sideways. CRWV. Probably coming back down. Watch that level. We get back below that 65 level. Might go lower low. Similar to the S&P P-Lab. Potential pop there. All right, let's look at some setups that were set up for today. Maybe wrap this baby up. AVN. W. Here's the pop. 2569 targets. GFF. Here's the high. Here's the low. Stop $1 below the low. Always. Here's the entry. 8628 targets. HAFC. Here's the high. Here's the low. There's the entry. 2769. Stop $1 below the low. LAD. Here's the high. Here's the low. Entry. Target 370. MYFW. Here's the high. Here's the low. Entry. Pulling back a little bit. Target 2566. NWFL. Here's the high, here's the low, there's the entry, 2825. And this one we already kind of talked about, 244. Bias for the day, still looking up. We'll see. We're might take the ES green here. Still looking for that upside target, the resistance, 65.62. That can kick off a bigger correction. 71.30 above that. We may hit this 65.62 area, pull back, and then launch off into the end and prove me wrong, get above 7,000 before we go below 4. We'll see what happens. See what happens. Be careful out there. Have a great day. I'll be in Discord. I'll be on Market Masters at 11:30. I'm going to teach you how to make your own indicator today from scratch. So if you want to do that, come hang out with me. If it's just prosperitypub.com/marketmasters. Otherwise, I'll see you tomorrow. Same bat time, same bat channel.